Aloha everyone. It doesn't really get much more interesting than what we had today. Remember, this is the month of March. This is when a lot of bull markets like to start, this month and October. We're going to start one. It appears we finally had the first day of convincing price, volume, and leadership action today. The Russell 2000 led this market up 2.67%. You can see by looking at the IWM, it's breaking out to new 2016 highs. Overall, I think so. Is it breaking out past that high back here? 110.83. Nope, but close, getting close. So it's almost at 2016 new highs, but it's breaking out to new March highs. And finally, volume is above average for the first time since the rally off the February lows with the pocket pivot point signal on the IWM. If you find yourself under invested on the long side like me, you should not beat yourself up. Once again, we have a market that is completely Fed driven. Janet Yellen said today that interest rate hikes are off the table in June. So that means we got to wait to the end of the year for the next rate hike, which means stocks are going to rally. And with the move out the February lows coming on below average volume, it's understandable if you're a trend following trader that you're under invested. However, following today, that's going to be hard to do because I have 8 new long positions. That is the most new long positions that I can remember in at least a year. We might have had it at some point in 2015, but I do not think so. I think 2013-14 would have been the last time we've seen that. So I got to take that as a pretty bullish hint. The market wants to rally higher. At the same point, it could be a major suck out, right? It could be have 8 cut losses, in the next few days. So we'll see. That's why, once again, despite the position sizes, if the dollar loss amount is going to be too much for me to take, I'm going to pull back on my position sizes in the new long positions we'll go over here in a second. The NASDAQ was up 1.67% today. Volume was significantly higher than the session before, still well below average. But as you can see, it was another pocket pivot point signal. The QQQ is above the 200-day moving average convincingly. Volume was much heavier in the previous session, still well below average, but who cares about volume? It's simply institutional investors, I guess, are not interested in this rally, but if they're not, I still want to be because I'm not going to fight the tape. And the tape is very strong right now. NASDAQ 100, also accumulation. The spider, strong day today. The S&P 500, as you can see, volume was heavier in the session before. Pocket pivot point signal for the S&P 500. The Dow Jones Industrial Average, a decent day. And for the Diamond, another pocket pivot point signal. There's been a lot of those lately. And once again, another problem with this rally is that defensive stocks and big cap value stocks really are leading this rally. But it's good to see the Russell 2000 take over short term today. So we'll want to see that continue. But overall, you can see here the Russell 2000 for the year is still down 2.36%. The Dow Jones Industrial Average, on the other hand, now has a gain of 1.19%. So normally you want to see the opposite in effect, but maybe, like I said, today's gains, we'll switch that around. Now, getting to the new long positions, first off, I also flagged Sino, cup with handle breakout, that I'm not taking long because it wasn't confirmed anywhere. But watch this one run probably without me. BECN was another one that I flagged. Look at all those pocket pivot point signals. Toll Brothers off the bottom. And then there were some speculative names like DXI that looks like it wants to break out higher. TGB, Box, KLDX. So as you can see, there's a lot of green charts showing up now too. They're just not perfect. The setups aren't perfect. A lot of times the price isn't bouncing off the 20-day moving average. If it is, the 10-day moving average isn't trending above the 20-day moving average, and or the stock is still too far away from the 50-200-day moving average. But when one of these, charts set up that's loaded with green gives me the kind of signal that I know that I want to see before I put in a big position, then we'll take the 5, 10, 20% because now we have the market environment. So on that note, we have some new long positions. ABMD, this is one of the better, stronger signals today, but it's going to be 2% for being can slim quality, 2% for being perfect speculator. It was also in my daily volume surge scan and my price volume BOP surge scan. Now, why is this only 6%? Why isn't it something like 10, 20% with that volume and BOP surge, the max green and that huge volume? Because look at this price action. Look at what happened in October, November. Look at what happened in February. Is there a lot of green bop leading up to this max green bop and volume surge and pocket pivot point signal today? No. So I'm going to have to take it as it is. Don't want to get too, into the short-term moment. However, if you look at a Zoom 2 on my telechart going back to 2015, you see the stock's part of a lovely long-term uptrend full of accumulation. It's just a choppy name, so it's kind of hard to want to really load up on this without all of this kind of bop in volume and actually more normalized price action that we saw in 2015 compared to what we've seen since August. So ABMD for now is going to be 6%. Final cut loss levels. You can use 89.74, you can use 89.02, you can use 87.87, and if you're really brave, you can use 83.36. I wouldn't even think about that. 87.87, I wouldn't let it go below that. I mean, this thing's now has enough momentum that it should move higher immediately. It doesn't move higher immediately. Got to start cutting your losses. But ABMD is a very, very high quality name. And then there's a stock like PRAH, and this is going to be difficult to go through all these. PRAH, back-to-back pocket pivot point signals off the 250-day moving average. The stock has a 99 earnings per share rating. Once again, if you look at the longer-term Zoom 2, very, very nice long-term pattern. PRAH, while not being a perfect speculator name right now, used to be a perfect speculator name. I think back here in August, September, and November, December. So it will be if it can break out to new highs later on. But PRAH is going to be, for now, a 3% long signal, can slim, confirmed in my price volume BOP scan. Then we have SFBS. SFBS is a can slim quality stock, also perfect speculator quality stock, confirmed in my price volume BOP scan. Back-to-back days where BOP and volume has surged significantly as it's retaken that 200-day moving average. This is a nice longer-term chart, high-quality name. Don't risk much if we're wrong, using the 40.90 as our final sell stop level. So SFBS is going to be a 5% long position, 2 for can slim, 2 for perfect speculator, 1 for price volume BOP. Then there's CMN, can slim quality, perfect speculator's quality. This is going to be 4%. First cut loss, 68.59. Then you could use 68.17. Final sell stop, 67.25. But once again, another high quality name with a bullish long-term chart. JBT, another can slim, perfect speculator name. A power pocket pivot point signal today. Nice strong move. BOP's going the wrong way. Volume surge wasn't too big. 5,200 days a little extended, but the stock is bouncing off the 20 and 10-day moving average with the 10-day above the 20. So I'll go ahead and go long. Once again, none of these long positions really risk that much if I'm wrong, but since I'm taking a larger size, the potential for a dollar loss amount is higher. But JBT, going to be 4%. Then there's Kate Spade & Company. Flagged it yesterday, flagged it many times throughout the month of March. It's actually breaking out to a new high today. Pocket pivot point signal, small surge in the BOP. The only problem is it's a little extended short term, so I don't want to get it at 25.53. I'm going to be setting limits around 25.27, 25.28, and if it can pull back just about a quarter, then I'll be long Kate Spade. Final sell stop, obviously 23.62, or else we're going to wait for a whole new base to set up on that one. And then there's Echo. Echo is a stock that I've been watching since February. Not a pocket pivot point signal today, but it looks like it's pulled back right to the previous breakout level here in March that was preceded by pocket pivot point signals, and as it broke out had pocket pivot point signals. It's bouncing on heavier volume, a slight jump higher into BOP. This is a can slim quality name. It was also in one of my BOP scans, the green BOP for 20-day scan. So with such limited risk with the big potential reward as it's a leading stock, 26.17, I got to get long here. If it fails here, I won't lose much, and then hopefully it'll reset up and we can get long again. And then the last new long that's high quality, APOG. This is also a bounce off support, another pocket pivot point signal. It's had many since its February lows. This is a can slim quality name that was confirmed in my price volume BOP scan. It actually has a 99 EPS rating, so once again, can take a larger position without having to risk much. 2 for can slim, 1 for being in my BOP scan, 20 days of green BOP, and 1 for being in my price volume BOP scan, total 4% position. Final sell stop 42.53. Also, I had an add signal in ALRM, 1.5% can slim, and it's an IPO, so we'll do half for that. 1 for can slim, 1.5%. Final sell stop can be this low here, 20.47. And then I got a speculative add PZE, final sell stop is a move below 622. Max green bop on this move, big volume surge, pocket